Hello, I'm Mijun, an American securities law professor. Let's start today's United States stock news on April 22nd. As always, we welcome you to Mijun, who is maintaining the integrity of United States stock investors. Now, as I mentioned before, I'm about to embark on the final journey of my life with a 50-day mark. I've mentioned before that it's a process of setting a goal and becoming like a child again, in a way. When we were young, we were extremely weak economically, so when we pass 50 and retire, our economic strength also gradually decreases. That's why we are actively investing through our community called Mijun. But that's not all. Physically, I feel a bit weaker than when I was young, and mentally, I don't seem to be as strong as before. When I was young, I used to cry a lot, but in my 20s, 30s, and 40s, I stopped crying. Now that I'm in my 50s, I find myself occasionally crying again, perhaps because I've become a bit emotionally weaker like before. And today I had a small accident. I fell down the stairs. So I'm a bit hurt, and I think I need to finish the broadcast now and go to the hospital for a while. I'm resuming the broadcast after bandaging the wound. My back is a bit swollen, so I'm a little worried. When I was young, I always had a wound on my knee called a scab, and when it healed, a scab would form, but I don't think I ever remember not having a scab on my knee. I think I fell a lot and had many minor accidents, but I haven't had any for a while since I became an adult. But recently I keep stumbling and making these small mistakes, and seeing myself like this, I really think I need to prepare for retirement. I'm getting old. I had these thoughts through a small accident today. This is the cycle of our life, which can be extremely harmful, both physically and economically, as well as in an orderly manner. At least we hold on to the hope that we can grow our economic strength through investment. Even in unfavorable situations, American and Chinese broadcasts continue. April 22nd, today's big hit news starts right now. This morning, the wind passing over the roof or stairs makes my body ache here and there. Even my heart aches. The United States stock market has shown a sharp decline again. If you look at the S&P 500, there are almost no sectors among the 500 companies that are not showing red. Yesterday, the market showed a generally unfavorable trend of rapid decline, and naturally, after that, President Trump was there, and yesterday, the market continued to show a strong trend of power fluctuations, showing an unfavorable trend of falling rapidly again at a rapid speed while President Trump was visible. Let me read you the post that President Trump put on social media yesterday, translated into English. Many people are demanding a proactive approach to monetary policy. Energy costs are falling dramatically, including food prices, the cost of a barrel of oil, and most other items, so inflation is virtually non-existent. With prices falling so dramatically, as I predicted, inflation could be virtually non-existent. The economy could stagnate if the main character, Mr. 2%, does not lower the interest rate immediately. Europe has already cut rates 7 times. Powell always acted late, except when he slimmed down to boost the election of Joe Biden, who was sleeping during the election period. Here you've seen Powell, the chairman, being a bit ridiculed as Mr. Too Late, always late, even with the same message. This kind of ridiculing message, not good rumors while posting such a message, so it seems that the market reaction was not better. Yesterday, due to President Donald's negative message, if you look here, the economy could be polarized, as he is saying. Due to such content, it seems possible to conclude that the United States stock market has fallen again. Recently, President Trump has been continuously sending negative messages about the power recovery, and why such messages are negative and why the market is falling. I will sort it out here. There are about 4 reasons for the pressure, and the first one is that policy uncertainty is increasing. Trump's attack on Powell and the situation of the chairman, what is this? He plans to weaken Powell by adding one more person under the chairman. Such speculation is now emerging. Well, if there is such a plan, it raises suspicion about the independence of the Fed. Therefore, there is no choice but to undermine the predictability of monetary policy. So the market always perceives uncertainty as a risk factor, and the thing that the stock market hates the most is uncertainty. Therefore, it can be interpreted as a risk that can additionally trigger the volatility of risky assets such as stocks. The second is inflation. Even if the interest rate hike is initiated, if this is interpreted as a political compromise, there is a high possibility that the market has given up the belief in the stability of annual prices. The original idea is that when you lower the interest rate, there's no concern about inflation, so you can lower the rate. But if it's done for political reasons, because of the president's pressure, there's a possibility that the long-term inflation expectation could rise. Therefore, it can lower the actual interest rate and have a negative impact on the stock price. The third one is a bit serious. The power is Trump's lifeline. Such opinions are widespread. Is this an attack on President Trump's power chair? The perception that it's a ploy to shift the responsibility of the economic downturn to Powell is now emerging. And if such a perception spreads in the market, investors are likely to see a higher possibility of an economic downturn. What does this mean? If Trump thinks there's no economic downturn right now, there's no need for a rate cut. But he's still attacking Powell. And if he only attacks and doesn't cut rates, that's the issue. If a recession happens in the United States in the future, there's something to be said about that. He started attacking Powell all of a sudden to create an excuse that the recession was not due to the tax policy I implemented, but because Powell did not lower the interest rates. This perception is currently spreading in the market. If confidence in the annual rate is undermined, the possibility of a continuous depreciation of the dollar value is high, and if so, the dollar could continue to fall and could fall further in the future if such predictions expand. Ultimately, there is a strong likelihood that foreign capital in the United States market will persist in being withdrawn. As a result, this can work as additional downward pressure on the stock market, and we can understand that the United States stock market continues to receive negative effects due to these four unfavorable interpretations. One fortunate part is, as many of you know, Speaker Pelosi has maintained a remarkably tough stance against Trump's attacks so far. Therefore, from our investors' perspective, we hope that Speaker Pelosi will continue to maintain the market's trust without change in the future. We will continue to organize the hopes of the United States market. Among the three major indices yesterday, the Dow Jones fell the most. It fell by 2.49%. If we interpret that again, the Dow Jones, which includes many stocks sensitive to the situation, is currently the market's worry. In other words, it's a recession. We can organize it like this. However, the Nasdaq 100 also dropped 2.47%. The S&P 500 also fell by 2.38%, showing a general downward trend across sectors, regardless of the type. You can see it this way. There are 11 sectors that make up the S&P 500, and yesterday all 11 sectors showed red. The sector that fell the most was consumer discretionary, which is now a cyclical stock, so the cyclical stocks fell the most, and the second most fell was energy stocks. Therefore, it can be interpreted that concerns about economic downturn are dominating the market. However, the sentiment of the market did not change as much as expected. First of all, if you look at the big score, it's stuck at 32.47. Therefore, we did not see any additional volatility index, distribution index rising sharply, and the distribution skewness index is also the same. The fear and greed index is stuck at 21, just like yesterday. Therefore, all three major indices showed a sharp decline, but it can be concluded that the sentiment of the market did not change. The market score provided by ChoiceDAC also showed a trend of rising one step from 24 to 25 yesterday. Next is the score of the United States stock market's top picks. Fortunately, yesterday, stocks related to Bitcoin soared. B2 rose by 598% and 102%, 88,410. Thirdly, MicroStrategy also rose by 0.18%, and all the stocks that rose are related to Bitcoin, as you can see. The rest all fell. 2.31%, Nextracker 2.53%, Taiwan Semiconductor Manufacturing Company 2.56%, Broadcom 2.80%, Amazon 3.06%, Uber 3.08%, Palantir 3.18%, Meta 3.35%, Celestica 4.11%, Nvidia 4.51%, Credit Technology 4.83%, Tesla 5.75%, Talon Energy 5.94%, and Vistra 7.75%. Lastly, Innovator fell the most by 10.17%, which was the worst performance. If you look at the movement of the numbers below, you can see that most of the stocks are showing a plus. Therefore, since the sentiment did not fluctuate greatly, we can expect a technical rebound today. To be honest, I don't find it particularly interesting to read articles about the United States stock market these days. There is a tremendous amount of news about various companies in the stock market. So many companies leading the fourth industrial revolution are showing such innovative movements. You can access many fascinating articles. However, recently, more than 50% of all articles are extremely negative content related to Trump. So even if you read the article, the content is that content and mostly negative, so the process of reading news related to the United States market is not as enjoyable as before. Today, as always, I plan to read some negative articles first. It's a prediction about the market. When a chart expert looked at the current movement of the United States stock market, we will try to see what expectations are made when technical analysis and technical interpretation are done. The stock market is in turmoil due to tax concerns and the drive for annual independence, but it has not yet found a bottom, and chart analysts warn that there is a high possibility of retesting recent lows. First of all, the issue has increased to 2. Originally, it was not very good even with one tariff. From last weekend to yesterday, there was a challenge to the Fed chairman, that is, Trump wants to move the Fed at will. Here, another risk is occurring, and the situation is not very good due to the 2 complex risks. This can be understood. Therefore, according to chart experts, there is a high possibility of testing the low point again recently. This story fell to 4,900 or even 4,800 during the market. Therefore, there is a high possibility of falling to that level again and touching the bottom. This is how we can understand it now. Monday's Dow Jones Industrial Average fell more than 1,300 points at one point. Investors could not find good news over the weekend amid the prolonged stalemate with China, the endless bad news, and the pressure of the Federal Reserve's zero interest rate. As I mentioned earlier, there has been hardly any good news recently. Well, in such a situation, let's take a look at what the technical analysts working in each institution are saying one by one. Chris Kim, a BTIG Securities Market Technical Analyst, came out. A rebound may occur, but at least more time is needed. It is predicted that Bitcoin will test the 5,000 to 5,100 range again and could fall to around 5,000. We need to see if it turns around from here, that's what I'm saying. He said that if investors have to deal with the current market, not the market they want, the market is still maintaining a defensive stance. So many investors think that since the stock price has fallen a lot, it will start to rise from now on, and there is a tendency to make such hasty judgments, but that's not the case. This market still has a very negative momentum, and therefore, there is a possibility that this downward trend could continue for a long time. It seems possible to understand this way. The second is J.C. O'Hara, a technical analyst at MKM Partners. Because the uncertainty that has been looking at the overall economy and taxes is still ongoing, it is still early to bottom out, it is still a bit difficult to expect the bottom, it can be interpreted this way. He interpreted that if stocks are to recover from recent losses, more time is needed, and the task of restoring the damaged trend will be even more difficult. Technically, when the stock price drops sharply like this, various support lines that have been accumulated are broken, and when these multiple support lines are broken, it becomes a hindrance when the support line rises again. The reason is that it becomes a lower line, so it is possible to understand that it can take a lot of time to break this because the lower line is formed by multiple lines. On the one hand, for the gold mining industry, gold is the answer for investors looking for safe assets. So now gold is the safest investment. That's what they're saying. The person in charge of technical analysis at Oppenheimer, Ari Wald, is coming out. He advised to use the upper range as a long-term buying opportunity and the lower range as an opportunity to sell weak stocks. So from a similar perspective, it would be difficult for a V-shaped rebound. Would this be understandable? That's why it's very likely to take a long time to rebound, so it's likely to zigzag. As mentioned, there are many resistance lines, so it will be blocked at each line as it goes up, and this struggle will take a long time. So when it falls, it's right to sell. And when it rebounds, it's not bad to take the opportunity to sell the stocks that I have that have not recovered well in price. You can see it this way. He is saying that the resistance line of the S&P 500 is from 5,500 to 5,600, and the support line is 4,800. The price fell to 4,800 long ago, making it a solid support line. To rise, it needs to break 5,500, but going from 5,500 to 5,600 is challenging. Wolf Research's Rob Ginsberg is coming out. He's talking about how there are more opportunities in foreign markets than in the United States market. He predicted a rebound after the April 7th low, but he's not meeting expectations. If it's a rebound, whether it's industrial goods or consumer sentiment, it should be pulling up. But in recent markets, utilities, essential consumer goods, and real estate have been strong. So this is extremely important. If we're now hitting the bottom and going up, the stocks that drive the economy should be better. As I mentioned earlier, yesterday energy and cyclical stocks fell, but these stocks should lead. That's a sign of a rebound. That's what I'm talking about. While maintaining the 5,400 support line of the S&P 500, the expectation for this reaction is gradually decreasing. The most important support line it seems to be 5,500. That's why most technical experts use 5,500 as a base, and only if it breaks through this line, either down to 5,400 or up to 5,600, it can turn into an upward trend. In this way, it seems we can have a bit of anticipation. And now, in the case of a downward trend, I will show you one indicator. This is the S&P 500 stock chart. If you look at the S&P 500 stock chart for a long time, it's a 10-year chart now. And fortunately, the upward trend line has not broken yet if you look at the 10-year chart. If you look here, it hit the bottom once in 2020 during the corona crisis. And then there was a bear market in 2022. This was the bottom. And then there was a bottom here in 2023. So it continues to maintain a certain trend line at the bottom. Luckily, it was 4,800 here. So 4,800 and successfully bounced back. So when we look at the long-term trend, the United States stock market's upward trend is still maintained. You can see it this way. Another thing, the reason why 4,800 was so solid was because it was a resistance point. Therefore, as long as 4,800 does not collapse, the upward trend of the United States stock market continues. It's still a bull market. It seems right to believe so. I prepared an article about Bitcoin for the first time in a long time today. But yesterday, Bitcoin-related stocks soared among the top picks of Y-Zone, and the rest all fell. Such a pattern is quite rare. Why? Because until recently, Bitcoin moved like one type of tech stock. So if the Nasdaq rises, Bitcoin also rises, and if the Nasdaq falls, Bitcoin also tends to fall, in most cases. But lately, this correlation is slowly breaking down. I think this is extremely positive. Let's take a look at what the article says. If the dollar and stocks show weakness and gold rises, and if Bitcoin manages to rally to $88,000 in the next few days, there is a technical analysis that it could rise again towards $100,000. On Monday, the price of Bitcoin rose by 26% to record $87,247, while the Dow Jones fell by 970 points on the same day. Bitcoin is at the same date as President Trump's inauguration day, January 20th. At this time, compared to the highest price of $10,922.5, it is still down by about 20%. As President Trump once again criticizes the Fed's power, there is a discussion in the financial market about the early adjustment of power. The dollar index fell by 1%. On the other hand, gold prices soared by 3% per ounce, setting a new record at $3,406. Bitcoin has been volatile for the past few years, especially in tandem with tech stocks, but in this market uncertainty, it's receiving attention again as a safe haven asset against inflation as sporadic panic occurs. Many people usually refer to Bitcoin as digital gold. Many were expecting it to function as a hedge, and if you see it this way, it hasn't been able to perform this function for several years, but this function is being revived again, so you can see it this way. From a technical analysis perspective, Bitcoin is said to have broken the downward trend line for 2025 earlier this month. This is the graph right here. As you can see, the trend line is steadily declining. The high point had been continuously declining at a certain interval, as you can see here, and the low point was the same, but this trend has been broken. So we had a bullish reversal. It's a sign of instability being detected. And there's another relative strength index coming out, what we call relative strength index, and the relative strength index has shown a bullish divergence. What does this mean? Whether it's a stock price or the price of Bitcoin, when it creates a new low, if the relative strength index records a higher value than the previous low, that's what it means. Even if the stock or Bitcoin price continues to fall and hit new lows, if the relative strength index is trending upwards and higher than the previous low, that's how you should interpret it. This is called a strong divergence, and if this phenomenon occurs, even though the price is continuously falling, the selling pressure is gradually getting stronger. Therefore, if the momentum is recovering, it means that a rebound is possible soon, and it can be interpreted in this way. According to Tyler Ritchie's technical analysis in the Sebels report, in this situation, if the market breaks the $88,000, it is possible to go up to $100,000, and it is presenting a bullish outlook. Katie Stagnetti, a specialist at Fairlead Strategies, also sees the support range of $88,200 to $88,800, and if this support line is broken, the next support line could rise up to $95,900, presenting such a bullish outlook. Well, let's summarize in a word from Michigan. As the United States stock market faces difficulties, Bitcoin may potentially serve as a hedge, which is anticipated. Well, there is a reason why we can have such expectations. Bitcoin has had a high correlation with stocks in normal times. Especially it moved together with tech stocks. However, in some past crises, we have seen a phenomenon where the price of Bitcoin rather decreases or rebounds when the stock price plummets. Blood currency refers to a secure and protected place, often literally. So, even in a very bad market where blood is shed, it has shown a tendency to survive as a safe asset, if you look at it this way. So, this story is about how, when most assets like stocks, bonds, dollars, and gold all fall at the same time, we can understand it as an asset that can maintain its relative buying power even in such situations. However, Bitcoin often shows a volatility of about 10% to 20%. Therefore, it cannot be a stable safe haven like gold. You can think of it this way. However, there has been an unstable part in the recent situation. After the Trump administration's power, the systematic risk has significantly decreased compared to before. One of our biggest concerns when investing in Bitcoin is, what if the government interferes? If regulations are strengthened, we could face great difficulties, but at least after the Trump administration, such regulatory risks have significantly decreased. Compared to the past, there seems to be a possibility to carry out the role of hedge more actively. That's my judgment. In conclusion, Bitcoin can be included in the diversification of the portfolio, as the relationship with general assets is not always certain. You should see it this way. Furthermore, if tech stocks rise rapidly, there is a possibility that they can rally together. Therefore, in the case of gold, it is still rallying. But if the market bottoms out and a rapid rise occurs, the possibility of gold falling is high. However, Bitcoin is somewhat different. Currently, it has the potential to function as a hedge, and furthermore, if it suddenly rises in the future, it has the potential to rise in the opposite direction. Therefore, Bitcoin has the advantage of being able to cover both downside risk and upside risk at the same time. That's how I think. So I would say that it seems very appropriate to allocate about 10% to 20% of your total assets as a small proportion to Bitcoin. The content prepared next is today's United States stock footage. In today's United States stock footage, Tony made an appearance, and at this point, we recommend you to check directly how Tony, a bearish investor, updates his expectations for the future United States market.
You still believe that stocks are attractive, but there's still uncertainty, right? So based on the VX standard, April 7th was the peak. Do you think that will continue?
I find it hard to believe that such a level of fear will be reproduced. So, we probably think that we have already passed the point of uncertainty. The debate about interest rates continues, though. However, it's hard to definitively say that we've completely passed the moment of greatest difficulty. The economic shockwaves persist, causing the market to remain cautious for now. Despite this, I think it's difficult for the extreme levels of volatility to repeat, so I believe that the structural low has already been formed.
Well, I'm not sure if we can definitively say it's hard for that level of volatility to occur again. In fact, I think it could get even worse. People were really scared. Some even think there could be a very strong washout, similar to the big crash in the past. You don't agree with that perspective, do you? Then let me ask you this. Do you really think the S&P 500 has hit a record low at this point? Currently down about 14% from the high point.
That's the situation. The 4-point spread was formed a few weeks ago, remember? In my opinion, there's a possibility that we could dangerously approach that low point again within the next few weeks. Many investors are still watching, and there's still a lot of uncertainty in the market. However, on the contrary, there's a point that we must remember. First, companies are incredibly resilient and have the ability to recover. This will become clearly evident through the earnings season. And another thing, we cannot rule out the possibility of unexpected shocks from the policy front or unforeseen recessions. What does that mean? Does it mean reversing some taxes? I think there could be policy changes that could be welcomed as a victory from a market perspective. One of the targets for trade negotiations could be China, and there could also be a long-term completion with China. Even if the possibility seems low, an unexpected result can occur.
The last prepared article for today is about Trump's approval rating. According to a recent poll conducted by Consumer News and Business Channel, Trump's approval rating on the economy has plummeted to its lowest ever. So through this article, what does the drop in Trump's approval rating imply? And can I explain any correlation between this drop in approval and the stock market? I've thoroughly analyzed the article. Well, I will have my last article read by an artificial intelligence that mimics my voice. It's a bit of a long article, over 8 minutes. That's all for today's broadcast. I'm going to visit a nearby hospital to resolve some of the discomfort I mentioned earlier. Among those who are with us in this broadcast, there are many senior actors who are older than me, and there are also many readers of similar age. I hope you will always be careful not to make mistakes like me and prevent injuries. I will gather various investment information that can be helpful to you all tomorrow and come back to greet you. We will all fight together until the day we retire with our United States stock investments. Have a happy day, thank you. President Donald Trump is reportedly recording the worst economic support during his tenure, amid widespread dissatisfaction with his handling of taxes, price increases, and government debt issues. The latest Consumer News and Business Channel All-American Economic Survey revealed this, according to the survey. According to the survey results, the economic optimism that had risen following President Trump's re-election has disappeared, and most Americans believe the economy will worsen after 2023, with skepticism about the stock market also significantly increasing. In this opinion poll conducted from April 9th to 13th targeting 1,000 adults nationwide in the United States, President Trump's performance in office received a negative rating of 44% and a positive rating of 51%. This is slightly better than the final rating he recorded when he left office in 2020. However, if we only look at the economic sector, in this survey, President Trump's economic management received a positive rating of 43% and a negative rating of 55%, marking the first time since his resignation that a Consumer News and Business Channel survey recorded a negative, positive, and minus in the economic management question. President Trump's Republican support remains solidly behind him, but the economic rating of Democratic support is 90, which is 30 points more negative than his first-term average, and even independent voters are 23 points more negative than the average. The blue-collar workers who played a decisive role in his election still tend to rate his economic management positively, but their negative rating has risen by 14 points more than the first-term average. Donald Trump was re-elected to improve the economy right away, but so far people are not satisfied with the results he is showing, said Jay Campbell, a partner at Hart Research, a Democratic polling organization. This survey also reflects the opinion of Mika Rovner, a managing partner at Public Opinion Strategies, a Republican polling organization, and Public Opinion Strategies. He said people's feelings about what will happen in the future are very confusing and volatile, and the data shows a negative pattern reaction that forms dissatisfaction and anxiety, more negative than any time in the past, and continues to show it. According to the survey results, 49% of all respondents predict that the economy will deteriorate within the next year, and those who believe that President Trump's economic policies will benefit the country in the long run are limited to his support base. This is the most pessimistic figure after 2023. In this atmosphere, 76% of the respondents from the Democratic Party believe that the economy will improve, but 83% of the respondents from the Minju Party and 54% of the independents answered that the economy will worsen. 27% of those who see the president's policy as having a negative impact said it would take more than a year, while 40% of those who see it positively said it is currently having an immediate impact on the economy. The tax issue is a major source of public dissatisfaction. Americans are generally negative about the overall tax burden, with 35% approval and 49% disapproval, and the majority of respondents believe that taxes harm American workers, prices, and the overall economy. Supporters of the Democratic Party were negative about the tax by a difference of 83 points, and the independents were opposed by a difference of 26 points. Supporters of the Communist Party were positive about the tax by a difference of 59 points, but this is 20 points lower than the 79% pure support for the president. Americans have strengthened their tendency to see all of Canada, Mexico, the European Union, and Japan as economic opportunities for the United States, and this is more positively evaluated than when asked during the first term of President Trump. The survey results showed that the president's perceived negative attitude towards these trading partner countries is not accepted by the general public. However, regarding China, there were more responses seeing it as an economic threat at 44% than those seeing it as an opportunity at 35%. And since 2019, the majority perception of China has become more negative. The majority viewed price management as the most negative issue. Negative evaluations of the president's handling of inflation reached 60%, and positive evaluations were at 37%. Of course, within the Democratic Party and the independents, the proportion who view price management negatively was 58% the lowest compared to other issues. 57% of respondents believe that a recession is coming soon or is already here, a significant increase from 40% in March of last year. Of these, 12% responded that the recession has already begun. 45% disapprove of the president's handling of government spending, with 51% giving a neutral rating, and for foreign policy, 42% give a neutral rating, with 53% disapproving. The issue where President Trump receives relatively high support is immigration policy. Responses disapproving of his handling of the national economy were 53% to 41%, and for illegal immigration, it was a close race with 52% to 45%. A majority was undecided on illegal deportation. On the north-south border issue, 22% of the Democratic Party gave a positive evaluation. Despite being a minority among the supporters of the Democratic Party, President Trump is the most advanced area. On the other hand, Americans had the most pessimistic view of the stock market in 2 years. 38% said it's a good time to invest in stocks now, while 53% said it's a bad time. This is in stark contrast to the heated debate about the stock market after the presidential election. In fact, the market pessimism recorded in the December survey last year was the most rapid in the 17-year history of the survey, and the non-optimism in this April survey was just as rapid. However, the president's unpopularity does not appear to be directly causing the Democratic Party to lose its majority in Congress. When asked which party should control Parliament, 48% chose the Democratic Party and 46% the Conservative Party, similar to the March 2022 survey results. A word from Midun. The table below shows the average term of United States presidents since World War II, their average economic approval ratings, the average approval ratings Americans held for the president's handling of the economy during their term, and the average annual return of the S&P 500. If we analyze the correlation between each president's average economic approval rating and the S&P 500 performance based on the above data, the correlation coefficient between the two variables appears to be approximately 0.2. This implies that even if there is a correlation, it is very weak. In other words, it is not necessarily the case that the stock market will definitely rise more during the term if the president's economic approval rating is high, and a clear linear relationship between approval rating and stock performance has not been found. The stock market doesn't necessarily rise more when the president handles the economy well and has high public support. Instead, it tends to move based on economic fundamentals or external factors, regardless of political popularity. In conclusion, historical data suggests that the United States stock market has grown over the long term, largely independent of political satisfaction. The graph above shows the relationship between the average economic support for each president on the vertical axis and the average annual increase in the S&P 500 on the horizontal axis. Looking at the graph, you can confirm that the data points are widely distributed from the lower left to the upper right, not showing a specific linear pattern. This directly shows that there is no clear linear relationship between the two indicators. In conclusion, based on this survey, we can make a conclusion that is not overestimated by a single voice following the historical statistics.